This is Radio Free Wall Street with Lee Adler, on the web at radiofreewallstreet.fm and wallstreetexaminer.com. Hi everybody, I'm Lee Adler, and this edition of Radio Free Wall Street was recorded on Thursday, May 28th, 2015. Well, it's been 2 weeks since we got together. 2 weeks ago, the S&P 500 closed at 2121. Today, the S&P 500 closed at 2121. So in 2 weeks, the market hasn't moved at all. And it's not like it had a big move up or down in the interim. It's basically been in a very tight range the whole time. It's extremely weird to see a market at 2100 on the S&P 500, 2120, and to see no movement at all over a period of several weeks. I think this is symptomatic of the complacency that's in the market, and I don't think that complacency is justified. I talked about that yesterday in an interview that I did with Lindsay Williams of CNBC Africa and Fine Business Radio South Africa. As you may recall, I met Lindsay back in 2013 when he did a documentary on the Fed's QE program. It was, I think, very well done, and I enjoyed my participation in that. And that's still posted on our YouTube channel at youtube.com/Wall Street Examiner. You can see the sections of that video that I mashed up to just include my portions of the interviews. Take a look at that if you haven't seen it. It gives you a good overview of my philosophy on how these markets work. But anyway, I spoke to Lindsay for about 15 minutes yesterday. And what I thought I would do, since there really isn't much more to talk about other than what I already spoke about with him, I took the audio portion of that and I overlaid charts that will illustrate for you some of the things that I was discussing with him. You'll be familiar with a lot of these things. Some of it is somewhat new material, but I think by putting these charts in to illustrate what I was talking about, it'll give you a much deeper perspective on how I'm viewing this market. So let's have a listen to my conversation with Lindsay and take a look at these charts as they're overlaid on the audio.
It's just after 6 o'clock on Wednesday, the 27th of May 2015. I'm Lindsay Williams and this is Fine Business Radio on FMR 101.3 FM, brought to you by Prudential. Coming up is an hour of local and international business and markets. Then we go to the United States. The S&P has been consistently making new highs over the last few weeks, but it hasn't been punchy. Is it reaching a top? Well, the man that has called the market expertly and accurately, more than anyone else in the world, I think, is Lee Adler. He's from the Wall Street Examiner, the founder and the editor and proprietor of that fine institution in North America, and he speaks to us today exclusively. The S&P 500 is hovering at all-time record highs. It's the month of May. We're going into the Northern Hemisphere summer, so of course it's going to do absolutely nothing. But on the other hand, it seems to defy gravity, even though Janet Yellen and all the other central banks are cautious about the world economy and interest rates are going to rise. The fact is that this thing doesn't want to go down. On the telephone now is someone who's called this market ever since I've known him, which has been around about 3 years. He's the founder, proprietor and editor of the wallstreetexaminer.com. It's Lee Adler talking to us from North America. Lee, we haven't spoken for a while. I haven't dared speak to you because you've been right so many times. This time, is there going to be a crack in the market? Are you calling the top here?
Well, first of all, thanks for the kind words. Calling the top to the degree that I think we're at an intermediate top. Beyond that, I think that the second half of this year, I'd probably rather be short than long. But as far as whether we've made the final top here, there's still, I think, some upside potential going into July. I think yesterday's break did break some minor trend support levels, but the proof from the bearish side will be whether the market can break 2080 on the S&P 500 and ultimately 2067. I think if those two levels are broken, then probably the bears will be in control. For the time being, it's in question, but I think we're moving towards that eventuality.
There's been a few false starts in the last couple of years, and there has been one or two occasions, maybe even three occasions that I can remember where you've been on the verge, on the precipice of calling the downside, and then the market recovers manfully and just carries on to new highs. Is there anything similar in the formations you're seeing at the moment?
Yeah, this is a little bit of the same thing, except that we're much closer to the upside projections on the various cycles that I look at than we were before. So I think the risks have increased. But the world's major central banks are still pumping the equivalent of close to 200 billion US dollars per month into the accounts of the major dealers, the primary dealers, and the major banks that trade in all world markets. And so as long as that's going on, it's going to be tough to get this thing rolled over to the downside. However, I think confidence is becoming an issue as investors continue to look at central banks as the saviors of the markets. They want to see some results in economic terms. And we've been going through this for 6 years now, where we've had all kinds of financial market stimulus, but the economies, the world's major economies, are kind of still in the doldrums. And sooner or later, I think time becomes a factor. Investors will become impatient as they wait for economies to begin to show a little more upward momentum, and that's not happening. So I think confidence will become an issue. We've never been in this situation before where we've had worldwide central bank support of the markets, and supposedly they're doing that to spur economic activity, but we're watching and waiting and watching and waiting, and nothing is happening in economic terms. All the same slowness is still here. Europe is still in crisis. Greece is about to default and leave the euro. So all the same problems are here. At some point, investors look at this and they throw in the towel and they start to sell. And then we're going to have the test of whether this central bank money printing is going to work in an environment where investors have quit.